Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday and also called Back to Work Day. Before we get into that, we'll start off with the economic news releases scheduled for today, October 17th. And that is the weekly jobless claims. We had 373,000 people applying for unemployment last week. The forecast is at 335. Remember, for a while there, it looked like it was dropping down between 320 and 330 range, and they had a slight increase. But with the last 2 weeks, we've had some pretty high spikes there. And this week, fared no better. We basically had 358,000 people applying for unemployment. So that's a lot of people, obviously, going out. Applying for unemployment rates here. So it'll be interesting once the Bureau of Labor Statistics release their unemployment rates or their job numbers. It'll be interesting what those come up with. Last but not least, we also got the Philly Fed for the month of October. This is the manufacturing of the Philadelphia area, and we had a 22.3, which is a pretty decent number. Is anything above zero is expansion, and it was supposed to come down in October, and it did, but it not as much as the forecast. So somewhere in between, decent, better than expected number there. So now we're going to jump over to the headline news, and we had kind of a mixed result on the stock market. The Dow was only down maybe 2 basis points for the market close. Everything else was up. S&P and Nasdaq were up, and it all back to government workers go back to work. So this is great news. Finally, try to get some normalcy under our belt, and hopefully pick up where we left off and try to get things moving along. Now, what does this basically mean? It's going to be interesting to see what fourth quarter and what the numbers going to come out with, because obviously with this government shutdown, we had a lot of numbers, important numbers from unemployment to retail sales to CPI, PPI numbers that were not released during the government shutdown, and there's still no timetable as to when those will be released. Going forward, right now, this is also a third quarter earnings report coming out, and a lot of people will be kind of looking to see how the companies will be out there. So we'll be kind of competing for the stock market in terms of where the dollar movement will be going. But today, overall, last 2 days, obviously the optimism yesterday, and then today, it didn't really change a whole lot. So it actually improved again on the Nasdaq as well as the S&P 500. So we're going to take a look at the bond market and see what interest rates today did, and obviously a bunch of investors jumped in today. We had a huge opening gap this morning. We did touch off the 102. Now, the 102 level, anywhere between 108.75 and 102 level, probably pretty much a lot of traders had sell, so that's why we kind of pulled back a little bit. Now, this opening gap, I would be very cautious. If you are floating any loans, I would basically lock in now, primarily because with that opening gap, they do have a tendency to close. We want that close to try to get that to go up further. It will create a more of a solid foundation for us to go upwards and try to get some better rates longer term versus a quick fix, so to speak. So if we go up too fast, and then we'll have, as fast as we go up, as fast as we can come down. So if we can build that, get that close, and start building slowly upwards, we can see some improvement in the rates. Now, I do think we could see some improvement in the rates, primarily because, one, I do think we'll have some earnings reports that'll be coming out later on, especially the fourth quarter. I don't think will be as good. If you watched my video yesterday, I gave an explanation as to I don't think the holiday season will be as good. We got the federal employees, which was nearly a lot of people out there, nearly 1 million people that were out of work. They're going to be trying to play catch up with bills and may not have the funds to be able to go out and buy extra for the holidays. So that might dampen their extra spending money for the holidays, as well as being here, living near the port of LA, largest port in the U.S., where we see a lot of traffic. Usually in a good market, we'll see a lot of the longshoremen will have a lot of hours for the Christmas season, and they didn't get that this year. So there wasn't a whole lot of extra shipments coming into the port here. So I don't think they're anticipating, to be honest, an improvement in the economy. It will probably be a slight improvement, but with this shutdown, I think it kind of put us back behind the 8 ball a little bit. Now, what does that mean? I think we could see some improvement in the housing market because the rates will come back down a little bit. I think more people would jump back into it. So those are some positives out of that. But obviously, we would like to create a solid foundation and see the economy moving in more of a positive direction as well. All right, folks. Again, a great improvement in the interest rates today. As we saw, we were at 101.34 yesterday and closed up at 101.91. So that's nearly 60 basis points, just over half a point in improvement in the pricing. So way to go. And we'll kind of wait and see. But if you are floating, I would highly recommend getting into lock mode right now, as short term this will probably correct itself a little bit before it gets better. All right, have a wonderful day. Thanks for watching, and I'll see you guys tomorrow.